Let's move away from that then, and it'll be interesting to as well dissect all that's going on within the entire FMCG space. What exactly is the way forward? What is the pricing strategy? Are we seeing a K-shaped recovery? Is the e-commerce boom really going to spur growth within the FMCG space? Let's find out. Sunil Duggal, the former CEO at Dabur, is now joining in. We also have with us Akshay D'Souza, Chief of Growth and Insights at Bizom, and Abneesh Roy, who is joining in. He tracks the sector very closely from Nuvama Institutional Equities. Thank you all for taking time out and joining us. I just want to begin with you then, Mr. Duggal, and understand how you're looking at the entire landscape then when it comes to the FMCG space. Are you looking at this sort of K-shaped recovery and this sort of a trend sustaining?
Well, it's been a very poor year, a very average year for the FMCG sector. And the near-term outlook doesn't seem to be anything significantly good. We do expect growth in the low to mid-single digits in the first half of the year, even though there are some tailwinds with regard to a good drop, etc. But overall, the demand situation remains muted. And the second half is what I think we can look to perhaps fuel some growth, predicated on a good monsoon and therefore a good kharif output, and perhaps also on the back of a low base. So optically, we get the illusion of growth. My concern going forward is not so much on the top line, but on the margins. Now, we've had a fairly benign margin environment over the last few quarters on the back of low base and fairly decent inflation lines, but not to be taken as a given. We already seen inflation creep up in some key raw materials, and this could accelerate in the event of any disruption in the Middle East, external triggers like that, or internal issues like a poor monsoon, maybe some other triggers. So I think the chance of the sector in the current fiscal FY25 would be less on the top line and more on the margin front.
Abneesh, the problem really with FMCG as a sector has been the kind of gap that one has seen with what the urban consumption trends are and what, the rural numbers are showcasing. Having said that, in the Q4 updates that have trickled in so far, it's a little impressive from a Dabur and Marico both, because it seems that both the rural as well as the urban gap seems to be narrowing a little bit. Not quite the case with GCPL just yet, though. What's your reading of what the rural recovery is looking like?
Yeah, thanks. Yes, in our view for the sector overall, urban is still growing faster. But yeah, select companies, there can be almost similar growth. But I would say that rural recovery is still awaited. My sense is in FY25, with a normal monsoon forecast and local players competition getting anniversarized, I would say that rural recovery can potentially start from Q2 FY25. There was a local player competition in biscuits, detergent, hair oils, etc., which will complete 4 quarters at the end of Q1. So post that, price hikes also should come back, as Sunil rightfully highlighted. Because of the gross margin pressure coming back, consumer companies will take a price hike. We have already seen in cocoa and coffee, a lot of players thinking of price hike, they have already taken. So that will also aid the overall revenue recovery, which has been very muted for the sector, especially in rural, for the last 1 year.
I distinctly remember when we spoke last time, you said that you've never been in a situation where rural demand is down. You said for the longest time, you've only seen a situation where there was a problem in terms of pricing and inflation, but India has never seen a downtick in demand per se. But now, is rural demand likely to come back irrespective of the monsoon cycle? I think I just wanted to encourage Sunil ji to be part of the discussion.
Yeah, it's hard to say. Like I said, critically important will be the inflation outlook. If it's high, then obviously it will dampen demand. And the good monsoon, which is also part of the first inflation issue. So if these two play out well, low inflation and good monsoon, I think we will see a substantial revival of demand, particularly in rural, especially on the back of a low base. So our categories look pretty good. But as I alluded to earlier, the challenges would be on the margin front because we are sitting on a very benign margin profile in FY24, and that will not repeat itself in FY25. So we could have a recurrence of the margin squeeze which happened a couple of years ago, which was mitigated in the last financial, need not repeat itself. That's my concern.
There was a time when we would look at rural demand as an FMCG demand or two-wheeler demand as an indication of rural demand. But do you think that is passé now and that's not the right way of looking at things, Akshay?
I think rural is not going anywhere as of now. Very important, one of the most important seasons that we actually have now is actually summer. I think summer is also one of the biggest fuel for consumption from an Indian context. And I think we are seeing with summers, I think we are already seeing a hot summer. We already seeing some categories like beverages or certain products in personal care are already showing an uptick. And I think some of them start showing up in the quarterly results that you see. And an early summer that has come, I think, is definitely going to be positive for a lot of categories. However, there is definitely a headwind from a confectionery and chocolate space where cocoa prices have soared. I think you will see a lot of price hikes there. But across most other discretionary products, we are seeing an active participation of brands in trying to even correct prices so that they drive consumption. So I think don't write off rural anywhere. I think it's just a season away from getting back into action.
For rural India to come back, either there has to be underlying demand, or we need to have good monsoons, or the feel good has to come back in the economy. Right now, everything is missing. Monsoons have been bad. The feel good feature of the rural economy, that is just not there. And if, God forbid, if you're not in for a good monsoon, you never know which way things would move for the rural India.
No, that is true. See, monsoons are critical from an income standpoint, but I think what is also important for consumption is a hot summer. Like, for example, last year you didn't have a hot summer, and we automatically saw that consumption of many products actually fell. Now, along with monsoon, even a good summer is important from a consumption standpoint per se. So I think you are already at cusp, and I think we're starting to see some of that. Some of that is starting to show in some of the categories. But yes, I kind of go with what you're saying, that you will need to have a better monsoon and a more stable and steady monsoon, really, rather than an erratic monsoon, for rural incomes to be stabilized and hence consumption to pick up better.
Just going as per your reports, you're talking about how the gross margins are likely to expand on a year-on-year basis, but the pace of expansion will be small. What exactly will be the reason for this, and will it be select companies or across the board?
Yeah, I expect that in Q4, slight expansion will still happen in the gross margin, and maybe even for the EBITDA margin, there will be slight expansion. So what we are seeing is, except some of the agri inputs, most of the raw material is still range bound. So if you see crude oil, vinyl acetate monomer, copra, etc., are largely range bound. There are some commodities which have also corrected. For example, tea has corrected 8 to 10%. So that's why we are positive on Tata Consumer. Coming to agri inputs, I would say cocoa, coffee, etc. are a concern. But on the other hand, milk, there is a deflation. So I would say as of now, the gross margin pressure is not something which is very acute. But I would say FY25, the price hikes will come back for most FMCG companies with 2 to 3% coming back. So that's the positive side. But some select categories, there is a margin pressure, especially chocolate players, etc. There is a margin pressure.
Sunil, I'd like to draw your attention to one more ingredient in the melting pot, and that is this entire quick commerce phenomenon which has started. Quick commerce, just for the benefit of our viewers, I'm of course referring to, let's say, a service like Zepto or Blinkit. It may be small, it may be niche, it has got nothing to do with rural India, but it promises to change the way how FMCG companies would in a sense be reimagining their distribution network going forward. So Sunil, what do you find could be the big change because of the quick commerce service where FMCG companies are now directly engaging with a service player like Blinkist or a Zepto or Swiggy?
Well, I don't see any significant differences in the overall architecture of quick commerce vis-a-vis modern retail. The supply chains for all consumer companies will have to be rigid to accommodate the very low inventories which these people would keep, the very quick service, the very high levels of service levels which they will seek. But other than that, I think it's just another opportunity for companies to get into another channel, and the companies who are able to execute well will benefit. But it's not going to change the basic mechanics of the way FMCG companies do business. A, it is small, and B, it is basically like modern trade or e-com or any of the other channels which we already used to.
So I'm going to get closing comments from Akshay. Akshay, if you have to, let's say, talk about the disruption which is happening in the FMCG market, whether it is online or offline, the incumbents are now feeling the heat. There was a time when the top 4 of FMCG companies would dominate everything. But now, because creating a brand is easy, managing supply chain is different, and because of the distribution and the network reach, a lot of new small staples and FMCG brands are getting created. So in the light of new wave of competition, how do you see the incumbents moving?
You're absolutely right and bang on. I think we are definitely seeing an emergence of a lot of traditional regional players now moving beyond their traditional geographies. And like you said, I wouldn't really say building brand is easy. Of course, it is challenging. But what I really think is become easier now is distribution across India has become easier. Digital has actually helped create distribution across the country. And I think that is what I'll see a lot of brands leveraging. And while taking their brand equity to other markets becomes simpler for them. Now, the big challenge, obviously, the big advantage that incumbents have had, obviously, has been supply. And I think when you're looking at the global economy today, I think, and that access being available to almost everybody now, I think it becomes that much more easier. So I think you're also going to see a lot of mid-sized companies, especially in FMCG, soon getting to $1 billion in the next 3 or 4 years. And I think that's very, very positive news. But yes, incumbents will have to keep reinventing themselves. I think a lot of them have actually gone very slow on newer categories. They would typically played wait and watch and let's see scale. But I think you will see a lot of new product categories and new launches kind of scale up for them in the next couple of years because they will need to be present where demand is shifting at the moment.
Some closing comments from you. Despite the fact that you're talking about it being subdued for the year ahead, what would be your top recommendations or picks maybe within the space?
Sure, thanks. Our topics will be essentially companies where the performance on the volume growth and margin is good. So we continue to like United Breweries, Tata Consumer, Godrej Consumer, Pidilite. We also like Colgate, although valuation comfort currently is a bit less. We'll be underweight from this perspective essentially on HUL ITC, but we do see that from Q2 onwards, the rural recovery and the pricing should come back. So HUL and ITC valuation comfort is high, but I would say the triggers at least 1 to 2 quarters we would need to wait.
All right, gentlemen, appreciate your time. Thank you so very much for joining in and giving us an all-round view as to what the status is for the FMCG sector and more importantly, the road ahead. On that note, it's time for a quick breather. Don't go anywhere. What's more lined up?